Hi, everybody. Welcome to today's webinar. Experts offer a quick roundup on student loan forgiveness. I'm Allison Kowalski, EWA's Member Engagement Coordinator. So today our webinar is going to get started. We have a 45-minute webinar, a little bit shorter than usual. So without further ado, I will pass this off to Jillian and we'll get started on this conversation.
Great, thanks Allison. Hi everyone, my name is Jillian Berman. I'm a reporter at MarketWatch where I cover student debt and education. And today, joining me to talk about student loan forgiveness is a panel of experts. We have a lot of expertise in this virtual room. I will introduce them alphabetically. So first we have Megan Coval, the Vice President of Policy and Federal Relations at the National Association of Student Financial Aid Administrators. She's been following the various forgiveness proposals as they wind their way through DC. We also have Derek Hamilton. He's a university professor and the founding director of the Institute on Race and Political Economy at the New School and one of the nation's leading proponents of full debt forgiveness. And then we also have Josh Mitchell, an economics reporter at the Wall Street Journal and the author of the forthcoming book on student loans called The Debt Trap. So let's start sort of laying the groundwork for, all of the proposals that are out there. There's a lot out there. Some are talking about forgiving it all. Some are talking about putting limits on it. And then, there's sort of a lot of questions as to who should actually do the cancellation. So I'm going to turn that to Megan. Can you tell us a little bit about all of the different proposals out there?
Sure. Thanks, Jillian, and thanks for including NASFA to be a part of this presentation. I'm happy to give a little lay of the land as to where things stand with regard to the debt forgiveness proposals. And I'll begin by saying that this is obviously an issue that has been kind of floating around for a while, but really kind of catapulted to the forefront of student aid policy discussions last year. I think in part due to the election and just the fact that access to higher education and affordability became a big part of the Democratic platform early on, and then also because of COVID-19 and obviously the economic toll and devastation that has taken. So these two external factors together, I think, really have elevated this issue to a place of prominence and really making it kind of a realistic policy proposal. So if we think about it, there really are two main proposals on the table, at least at this moment in time. So the first one is a proposal that was introduced and is supported by Senate Majority Leader Chuck Schumer and Senator Elizabeth Warren, and that is the proposal to give up to $50,000 in forgiveness to every borrower. And this was a proposal that was introduced formally last September for the first time, but was reintroduced last week in the form of a resolution calling on the Biden administration to do this $50,000 forgiveness through executive action. One distinction here is that the earlier version of the proposal did have an income limit. So it said that this $50K debt forgiveness would be for those with incomes of 125 or below, but last week's resolution did not include that income limit. So that's one difference. A version of this resolution was also introduced in the House, so there is some support there as well. And then big picture, canceling $50,000 for everybody would shrink the outstanding loan debt from 1.7 trillion to 700 billion. So those are kind of the big picture things there. And this does come with a price tag of around $1 trillion. The second proposal that we've heard a lot about, obviously, as well, is President Biden's proposal to forgive $10,000 in loan debt for every borrower. This is something he talked about frequently on the campaign trail and oftentimes within the context of COVID-19 and sort of being a form of stimulus and borrower relief. This would eliminate debt for over 16 million borrowers. So just to offer that point of comparison to the first proposal. Another point of distinction here is, whereas the Schumer-Warren proposal very clearly calls for this to be done through executive action, we're a little less clear on where the Biden administration is on this. So just last week in a press conference, Press Secretary Jen Psaki said that President Biden was going to be looking to Congress to do this. And then shortly thereafter, she issued a tweet basically saying that the administration was, in fact, considering avenues for potentially doing this through executive action. So I think those are kind of the big outstanding questions as to the path that this might take. And then last thing I'll say just in terms of setting the stage here is that I think there are, a handful, obviously, of political realities, or maybe kind of considerations is the better way to say it when we think about this big picture. First is that there is a hurdle when it comes to process. So, we at NASFAR are not experts on the legal issues here, but I think it's fair to say that there are smart people who could argue reasonably on both sides of whether or not this could be done. Second, the proposals come with a pretty price tag at a time when we had some pretty expensive stimulus bills just in the last 9 months. And then I think, there's debate about whether or not this is appropriate in the form of a stimulus. So would doing something like this really, in fact, stimulate the economy, especially at a time when borrowers have their payments paused anyhow? Or is it a better conversation for HEA reauthorization? And then last, and I'll stop here, is that I think a big consideration is that this would use quite a bit of political capital pretty early on in President Biden's tenure. So it's just something I think the administration has to keep in mind, especially when they have other really big ticket proposals like doubling Pell and wanting to, go to free college. So those are just kind of some political considerations to wrap up the background.
Great. Perfect. Thanks, Megan. Okay, so we ran through just briefly a little bit of the political considerations. And now I want to turn to Derek, who he recently had an op-ed in the New York Times talking about student debt forgiveness. And I'm wondering if you can just walk through kind of your support for the proposal, and also sort of the different levers that you think it will pull, and how it will pull them.
So I support full cancellation, and the first reason is starting with values, making the moral case. In the 21st century, we can afford, and we should afford, to provide everyone with a debt-free college education in general, from grade school all the way through college. And, to me, that's just centered in rights because it's the right thing to do. So we all often talk about the value added from an education in terms of productivity, but it as a right and what it can do for you is something that we should do, period. I think that's the first point to make. Another point is, if we make an economic case of our young people in general, particularly millennials, the last great recession, we told them to wait out the recession by going to college, investing in themselves, and that when they came out, they would be better prepared for the labor market. So not only were they scarred by that recession, we saddled them with debt as they went through that recession and waited it out with record levels of debt. And now they're faced with another calamity, a pandemic of a double scarring, where we present to them the pathway towards their economic mobility through college, but yet they're saddled with this debt. And then, I want to make the race argument as well. If we think about Black people in the United States, we think about the politics of race, we think about the economics of race, and just the ways in which we sort populations and based on their racial identity, period. We would know that for Black people, we say, yeah, we know you face barriers, but if you invest in a good education, that you too have social mobility in America, that you too can aspire to the American dream. But in reality, it is the racial wealth gap itself, which, I can get into details about how that was generated through both lack of access to public policy and outright theft. I mean, something else that we should note coming up is the 100th anniversary of the Tulsa massacre, when Black people were able to amass any type of financial security. Throughout our American history, it's been vulnerable to confiscation, theft, etc. Well, the racial wealth gap leaves us vulnerable to having to use student debt as a mechanism to finance an education. And at the point of delivery of something like an education, when people say, if you want to have social mobility, invest in yourself, get a college education, we should think about what we're doing when we put the stigma of finance, as well as the psychological stigma of debt itself, on young people at that point of delivery. Of course, we have to pay for it, but let me make another quick point. We'd be naive to not realize that in the education system, we know who the financial aid students are, and we'd be naive to not realize that they're treated differently. So another argument to cancel the student debt and to provide pathways of tuition-free college education is that the stigma itself should be removed. We should not be sorting people into who has access to a quality education based on their ability to pay. And if we add the notion of the ways in which we have been pernicious in the ability of Black people to accumulate assets, and the fact that even when they get a college degree, the economic returns to a college degree are less for Black people than it is for white people when it comes to wages. When it comes to health, we know that a Black person with a college degree is 70% more likely to die between the ages of 25 and 64 than a comparable white person with a college degree. So, it's noteworthy that we ask Black people as a pathway towards economic security to get a college degree. It's more costly for them, and it has a lower economic return. So to me, again, it all comes down to the moral case of, while young people wait out economic calamity, that we tell them to go to college, while Black people are told that their pathway towards economic security is investment in a college degree, we should not impose upon them the albatross of student debt and so getting that access to the American dream. And finally, we should do it simply because it's the moral and right thing to do.
Got it. Yeah, thank you for sort of laying that out very clearly for everyone. I think it'll be useful for reporters as they work to cover this. Josh, I'm wondering if you can just talk through a little bit some of the, sort of opposition, both policy and politics-wise, that you've heard about student debt cancellation.
Sure. Well, I think the big question is now what? There's a lot of questions that we can go through about, sort of what it would mean, what would happen with student debt forgiveness. I think the biggest one is now what? So you forgive student debt, people are going to college next fall, they're going to graduate school next fall, they're going to have to take out loans without a new system. And so what do you do with those loans? What's interesting is that, I've talked with people on the Republican side who agree a lot with what Derek just said. I mean, I interviewed Ron Johnson. He's a senator from Wisconsin he sort of came into power on the Tea Party wave, and was kind of expecting him to be strongly opposed to this. He actually said almost the exact same thing, which is that he feels like we've done morally wrong as a society and putting on so much debt on young people. But when I talked to him to try to get his perspective on this, and he's not, sort of the main guy here when it comes to education, but I did want to pick his brain on this. He said the big question is, how do you, if you wanted to get someone like me to support this, what is the system from here on out? And so I kind of compare this to Obamacare, the whole debate about healthcare. If you go back to 2009, there was kind of the same type of discussion going on, which was that, the cost of healthcare is rising. It's really hurting a lot of households. And what is the responsibility of Congress to help them? And there was this debate within the Obama administration about to do sort of the most politically expedient thing, which was to, expand healthcare coverage. Or there was this other side of the discussion, which was, let's just not do that. Let's really try to attack the cost drivers that are making healthcare expensive in the first place. And while Obamacare, while President Obama's healthcare law did have some things in it to try to get at the cost drivers, it really was mostly trying to expand insurance to households. And I think we're in kind of the same discussion right now with higher education, which is that, there are systemic drivers of the cost of higher education. And right now the discussion is focusing on how do we provide relief to people who are already in student debt, but it's a little less about what do we do to prevent another run-up in student debt. So I think that is one of the biggest concerns among a lot of people in this discussion right now, and one of the biggest concerns among Republicans who might oppose this. Also on the Democratic side, I have to point out, this is not just Republican concerns. There's a really big schism in the Democratic Party that's very interesting. And then, so that's sort of the biggest question, but I think questions underneath that, I get emails all the time. I'm sure you do too. Whenever I write about this, I get angry emails from people saying, wait a minute, this is not fair. I paid off my loans 2 years ago. This is not fair. Why should my tax dollars pay off loans for someone else? Especially they get really angry about the idea of paying off loans for people who went to expensive private colleges or graduate school. And that's one of the big questions is, who does this exactly help? Derek makes a great point. Blacks are disproportionately affected by this. On average, Black Americans have, earn a lot less than white Americans. The survey of consumer finance data is extremely eye-opening. If you look at the latest, it just shows, the typical Black household with student debt is far more than any other household. So, if you look at it from that perspective, this is progressive, which a lot of Democrats get behind. But then there are other Democrats who say, wait a minute, if we forgive student debt across the board, that's actually disproportionately going to go toward upper income households. So there's a big question about, is this regressive or progressive? And then there's also the question of private loans, not just strictly private loans that are made by, the Wells Fargos of the world that have no relationship with the federal program. What happens with those? But there's also private loans that were made under this old guaranteed loan program that was the biggest form of student loans before 2010. Obama killed that. What happens with those? It's sort of tricky when it comes to the law. How do you compensate those banks that still have those loans on their books? And how does Congress sort of work that out with them? So I think those are sort of the biggest questions right now.
Yeah, definitely a lot for a lot of people to dig into here. And yeah, I'll say I get a lot of those emails, and a lot of times too, some of the emails are about, I saved for college, and and sort of now what. And of course, we can talk about who has the ability to save for college, and what demographics sort of are most able to do that. But I'm wondering too, I think a lot of people might be surprised to hear your conversation, with Republicans who are, supportive of this in theory, maybe. And I'm wondering if you can just talk a little bit about how, kind of the opinion of student debt cancellation has evolved in the time that you've been covering student loans.
Yeah, I think one of the reasons why there might be a little more openness on the Republican side to a little bit amount of debt forgiveness, I don't want to overstate how much there could be there, is because they hear from constituents in their state. If you look at, who student debt affects, yes, DC, for example, obviously has a lot of student debt because a lot of college graduates live in DC. There's also a lot of people. There was a great map that one of the think tanks did. I think Marshall Stonbaum did it a few years ago. I forget which think tank he was with. Washington Center for Equitable Growth, I want to say. Did a map, if you look at where a heat map of defaults. And it was actually in a lot of rural areas, or a lot of areas that in Arizona that were hit hard by the housing crisis. And now they were hit hard by student loans. And, so this is not just an issue that affects constituents of, one type of state or urban areas. It's actually very broad. And so, I think there are a lot of Republican lawmakers who are hearing from constituents. Wayne Johnson is a Republican who was with the Trump administration. He was the head of the FSA portfolio, comes out, runs for the Senate in Georgia, and says, he wants to forgive student debt. So it is interesting. This issue has evolved. As Megan said earlier, this was a huge part of the presidential campaign. It was only 10 years ago where basically the Obama administration kind of scoffed at the idea at first of free college. Obama, Adam Harris did a great article on the evolution of this. This particular question of the evolution of the Democratic Party's position on student loans and free college. Back then, Obama, when he was running for his first term, his big thing was to increase Pell Grants by like $2,000, and nothing to sneeze at. That has a big impact on people who use Pell Grants, but that was far from college free. And, and early on, just, talking with, people within the administration, they just really didn't consider the idea of free college to be a thing. And I'm coupling free college with the idea of student debt because I think they're linked. But slowly but surely, student debt, actually not slowly, quickly, student debt soared and defaults soared. And I think that really changed the equation. If you just look at a chart of student debt, particularly in relation to other forms of household debt, it rose so quickly. And it really started, not just in terms of the number of people who took it out, but the balances, those have risen, particularly among people with big student debt burdens. I know that the average balance is still, 30,000 or whatever. But if you look at sort of the people on the margins, that minority group is quickly growing too. So I think it's evolved because of what's happening on the ground.
Yeah, definitely. Okay, so now I think we're going to turn to a question that, that's always important when covering, a political issue like this, which is cost, and how we evaluate cost. And I think all of you maybe will have a different perspective about, sort of how we evaluate it, whether or not it's even, sort of an important consideration. So Megan, I'd love to start with you. Just, sort of how do you think about the costs, and what are you looking at when you are evaluating them?
Yeah, I mean, cost is always something, a factor to consider in public policy, conversations. And I think, both of these proposals do come with, large price tags, but that doesn't mean off the top that they should just be, thrown out the window because of that. I think, when it comes to public policy, it's a series of choices. And in the way that we kind of look at this, at NASFA, not just this issue, but other issues, is that, we always assume that we are, we're kind of operating with a finite amount of money here, in our world, and what are we seeking to achieve with those dollars? And so I think these are some of the outstanding questions that are within our community right now. As a country, what are our number one, number two, number three public policy goals as it relates to higher education? Is it, increasing access on the front end? Is it reducing indebtedness? Is it both of those things? So I think we just kind of have to weigh sort of how much something costs, knowing we have finite resources, and trying to figure out, which proposals will move the needle as much as possible to, achieve those goals. And I think, with this issue in particular, something Josh said kind of comes to mind, which is just the what next piece, I think, is something that we're spending a lot of time thinking about, where, this certainly would benefit a lot of students, but then what do we do next? We spend all this money, but then if we still haven't tinkered with the rest of the system, where will that leave us?
Yeah. And Derek, what about you? How do you think about this question, both costs and, sort of, I know it's been brought up a couple times, but what do we do next?
Yeah, I mean, Megan and Josh are spot on in the sense that a pathway to a tuition-free education is a strong complement to what canceling the debt would do, which is retrospective justice. The question of cost, another way perhaps to frame that is feasibility. Do we have the capacity and the feasibility to do this? To me, the answer is a resounding yes. Even from a political perspective, if we think about executive action and what we can do even with and without Congress. It's great if Congress comes aboard, but there's some immediate things we can do in general. And then, the issue of feasibility or cost, I think we have come to realize the notion of debt needs to be rethought in terms of the capacities of what federal government can finance. Really, it's a question of priorities. As Megan said, it's a question of priorities and values of where you want to direct your resources. But we should also note that the federal government running deficits is not like other entities running deficits. In fact, if we were running surpluses, that would be contractionary. That would be the private sector having liabilities to the federal government. So I think we should certainly be concerned about how big the deficit is and how big the debt is. I think that narrative of what we can actually hold and what's feasible has certainly changed with this pandemic and with tax cuts. But ultimately, it's a question of values, and clearly not burdening our young people with debt should be a value that's high.
Yeah. And Josh, what about you? How do you, when you're writing a story about this, sort of, what do you look to evaluate costs?
Well, it's tricky because when we talk about cost, are we talking about the CBO score? The thing about the CBO score, which is basically the number that Congress uses to see how expensive or how profitable a law is, what is that based on? And the CBO has gotten those numbers wrong over the years, in part because it's hard to know what the repayment rates are when you start introducing things like income-based repayment and public service loan forgiveness. I hope I'm not speaking too much jargon here. But anyways, the point is that it's really hard to know how much money the government is going to bring in from these programs or lose on these programs from this perspective. a lot of, for example, a lot of the money that the government has or expects to get over the years is interest. And so when Congress charges interest on these loans, 6%, 8% on graduate school loans from the older cohorts, is that a cost if students don't pay back all of their principal with 8% interest? What if they pay back all of the principal but no interest? That's sort of, again, more of a question for Congress in terms of how much does Congress want to quote unquote subsidize these loans, and what does it mean to subsidize them? Yes, in some respects, people are paying back their loans, are paying back less in interest than they may have gotten on the private sector. But, Congress can borrow at very low interest rates. And so is it a cost if students are still paying it back at those lower interest rates? So I think the other question, though, is, and I hate to throw cold water on the whole idea of the federal debt, but I think this is important. And this is something that I keep in my mind. There's a really good book by Robert Samuelson that I just read recently to sort of understand inflation. And he's a columnist for the Washington Post, and he wrote a book, I think it's called The Great Inflation. It's about how, inflation back in the 70s and early 80s was absolutely skyrocketing. And there actually had to be, this huge recession that the Federal Reserve basically induced to get inflation under control. And his big argument was no one really was concerned about inflation until it really started to skyrocket. And by that point, it was too late. It was little by little from the mid 60s until the early 80s. Congress and the Federal Reserve made a series of choices that slowly but surely led the country down the path towards surging inflation. And so one of the things that I wouldn't say I'm worried about, but I try to pay attention to as a reporter is, are we lulling ourselves into the same type of environment that we've been in over the past 15 years? Yes, I think a lot of people, including myself, in terms of how I thought about this, got sort of this whole question of the consequences of high federal debt wrong. 15 years ago, that was a very big focal point among the Obama administration, among the press. I do think that we probably got that wrong in some respects, but that also, I do worry that maybe we might be going down the other path of not paying enough attention to it until where, all of a sudden it's like, oh my God, how did this happen? And so I think this all ties in. I know that I'm sort of meandering here, but the point is that if we spend $1 trillion forgiving student debt and that adds on to the federal deficit, we might not see consequences now, but will a higher deficit eventually lead to consequences? I hope that made sense. It's kind of all over the map, but
yeah, I think so. And yeah, and just sort of bringing us back to all of the, kind of like broader economic considerations when thinking about this. And so I think we'll see, this may be the last question before the audience comes in, but I'm wondering if you all can each, kind of share something that is either, undercovered, or you think kind of that, that a lot of the coverage gets wrong about this, so that the reporters listening might be able to get some ideas. And I guess for that, let's start with Megan.
Sure. Yeah, I think maybe I would say undercovered, not necessarily something that folks get wrong, but I'm going to go back again to kind of the what's next piece. So whether or not we go down the route of debt forgiveness or not, I think there has been an acknowledgement that there are other pieces of the system that need fixed. And I think especially, when you all are, humbly speaking as a person who is not a reporter, but when you all are covering this and maybe you meet opposition that is, it's too expensive, or it's not well enough targeted, or the what next, I think really pressing on the what next piece is something that we could focus more on. And I mean, that's part of NASFA's role too, to think about that thoroughly, but really kind of pressing folks on what does that look like? So there's obviously the college cost piece on the front end, but simplifying the income-driven repayment system, looking at maybe modifying or changing public service loan forgiveness, and not just kind of those quick talking points, but really, okay, how would you do it? We're actually getting to a point, just anecdotally, I'll share that we have a long-standing proposal. Well, there's 7 or 8, depending on how you count them, different income-driven plans. We should simplify that into one IDR plan. But ever since this discussion has been lifted up, the student debt discussion, and us thinking about how we need to fix more things, we've been talking about, we really need to drill down there, not just put it into one plan, but At what point in time should borrowers get forgiveness? Is 20 or 25 years really reasonable? Should it be different? How much of their discretionary income should they be expected to pay? So I think it's really pushed us to think about those things more and with more detail. And I think I'd love to see that, more of that from the whole community.
Great. And yeah, Derek, what about you?
So, it's hard to imagine that we are struggling as a society with the debate of the merits of whether we should provide a debt-free college degree to people in the 21st century. But our reality is we are having this debate. So why are we having this debate, and what is preventing us from actually doing it? I think two big things, and Josh hit on both of them actually. One is the question of deservedness, a question of, well, I paid for my way. Why should somebody else not pay their way? And I'd say that whole notion in our political economy of deservedness is very racialized. There was a period of time when we had the GI Bill, and there wasn't a thought about whether soldiers returning from World War II deserved a college degree without having debt. But we've gone through various transformations where our notions of who deserves and who doesn't has been very racialized, and I can talk about ways in which it's been racialized. So that's a political economy or a politic frame that we need to address. And then the other thing that Josh mentioned was, again, the feasibility of affordability, and he rightfully talked about the potential of inflation as a concern. But let's put inflation in context. Not all government spending generates inflation in the same way. It's non-productive spending that can more likely generate inflation. And in investing in our young people, our treasured resource, by no means can I describe that as unproductive. Right? We are wrong to think that spending on a college degree of young people as unproductive. In fact, not only is it investing in our most treasured resource, which is the human capacity of our people, it will generate multiplicative effects that probably we wouldn't even know until we implement it. So I'd say that the constraints on us doing it are political and inaccurate, and that in the 21st century, we really should do this.
Great. With that, it looks like Kim's back, so we will turn it to audience questions.
Okay, yeah, so I'm just listening. We had several really great questions. Several of them asked about the whole idea of means testing. Is that definitely off the table? Wouldn't it solve some of the fairness questions about, paying off the debt? Does anybody want to, Josh, you want to?
I definitely think that's still a big part of the discussion right now. I think that might be the biggest part of the discussion. It's the same type of thing about stimulus payments. Should Congress provide every household with $2,000 for stimulus, or should it target it toward people who need it the most? One side of the debate is it's just simpler, quicker to forgive or give everyone $2,000. Same thing with student debt forgiveness. Just do it across the board. The other side is, and there's a really vigorous argument coming from the center of the Democratic Party, I think right now, saying no, and we can means test it. I think if you want to hear more about this, read people like Adam Looney. I think he does a good job of saying, he does, or making the argument that you can actually means test this in a way that you could do it pretty quickly. Again, I think there's vigorous, strong arguments on each side of that, and it's very much a part of this discussion.
And Megan, are you hearing can you share anything you're hearing from inside DC about whether this is off the table or on the table?
Yeah, no, I would just echo what Josh said. I do think it is a part of the discussion. And I mean, it potentially could be sort of where we land, right? If we can't get far enough to do this sort of across the board forgiveness, whether it's the 50K mark or the 10K mark, the sort of more targeted approach, might be in the middle. And, in some places we have good data, in some places we don't, but we do know kind of a decent amount about our defaulters, for example, but the bulk of defaulters have a loan balance of below 10K. Now, that doesn't mean you could be a person who's not defaulting and still struggling with your loan debt. So I want to be clear about that. But I think these are the kind of different conversations that people are having in the different paths that they're talking about.
Yeah.
And Derek, what do you think about means testing?
I mean, clearly 50,000, up to 50,000 is better than up to 10,000. But we should also recognize that the average debt for Black students more recently graduating from college 4 years after graduation is 53,000 on average. So, you know, that's sobering. And the fact that we know some people over the age of 65 that are collecting Social Security and still paying down student debt. So, you know, cancel it all.
Okay. That raises the question of parent debt. Is there, and do any of these proposals address parent plus loans or parent debt?
Well, so, I mean, Joe Biden's proposal and, you know, the laws in Congress, they apply to federal loans. Now, the bigger question is, you know, do they apply to private loans that were made under the guaranteed program? But federal loans, I mean, parent plus loans are federal. So, you know, if under Biden's proposal, parents would get that.
What about private student loans? I mean, a lot of people have taken out private loans from private banks and private lenders. Is there any hope for them at all?
I think there's a lot less.
Jillian?
Are you? Yeah, Jillian, you probably are better at this.
Yeah, I mean, I think there's, you know, probably a lot less hope for them, but you know, I think it is in conversation for people obviously who are pushing for student debt forgiveness, right? That's they want everyone included, not just if you took out a certain type of federal student loan. So we'll see.
And Megan, do you know anything more about private student loan forgiveness?
No, not more than what's been said, just that it is in the conversation, but I think the focus is on federal for sure.
I mean, the tricky part the trickiest part, I think, is that Congress would have to they would have to negotiate with banks to compensate them. And, you know, it's hard to do, I think, with the guaranteed loans, because you have to figure out how much, you know, are you making the banks whole? That is a contract, but to do it with even no guaranteed loan, I think that gets tricky, and I think that would be hard for Congress to pull off. I'm not saying that they won't, but I think that's one of the biggest obstacles.
Okay, we have a question about data sources. I've put a few resources in here, but one person asked, how do you, if you're a local reporter and you wanted to find out, say, how much student debt there is in your state or your community, is there any data sources you guys can recommend?
Just call Robert Kelchin. No. No, the Washington Center for Equitable Growth had this great heat map that all over the United States of defaults. I'm sure there's others. You know,
they were talking about how much state has in student loan debt.
Yeah, this heat map had that. Yeah.
I think it goes down even to the zip code level.
Yeah.
So,
yeah. And you know, and you can find something like that, which was in 2017, and then call the author and say, how do I get updated figures? You know, a lot of these things have been done over the past 5 years, but there's nothing stopping you from doing your own project and saying, you know, oh, this is great, you did it by zip code, which data set did you use? A lot of these researchers are incredibly friendly and will help you, you know, update it.
Yeah, and
yeah, I think I saw something. Go ahead.
Oh no, I would also add that, you know, in a lot of Federal Reserve Bank branches, you know, so I believe in Philadelphia, they've done research on it, in New York as well. So, I mean, depends on where you are. It's not for everyone, but San Francisco, I think too. So you can get the data that way too. And a lot of local state lawmakers and agencies are increasingly sort of paying attention to student debt, and so you know, they might have tried to study it as well.
Kim, I would just add.
Yeah.
Oh, sorry. I was just going to add also one other addition to that is that the Institute for College Access and Success, TCAS, has a project on student debt, and they put out reports frequently that break down the data in multiple different ways and iterations.
Yeah, that's a great idea. Eric Sturgis of the Atlanta Journal-Constitution asks, what are the thoughts of the panelists regarding income share agreements and their impact on the debt issue? Josh, do you have views on income share agreements?
Well, it all depends on what you mean by income share agreement. I mean, income-based repayment, which is a federal program, is kind of like income share agreements. It depends on how they're designed. It depends on, sort of who backs them. Where does the money come from up front? How much, one of the things about income share agreements is that Yale had a program in the 70s. Bill Clinton actually participated in it at the Yale Law School. And students there was a Wall Street Journal story in the late 90s about how students were really resentful because Yale actually was making a lot of money off of them. And so one of the questions is, if you have an income share agreement, how long do you pay it off? Sheila Bear. She actually has a pretty fleshed out proposal, if you want to look into this, about how, she favors, she's the former FDIC chair, Republican under the Bush administration. She favors income share agreements, but she wants a hard cap as to how many years you pay it back and how much money you pay back, so that, investors don't make like all this money off of students. So I think that there's trade-offs and risks in any type of plan. From a high level perspective, I think of income share agreements as part of the broader discussion about one of the ways to, if policymakers wanted to replace the current system, because it spreads risk. I think one of the underappreciated aspects is that colleges haven't had enough risk under the current system. And so one of the arguments I make in my book is that the current design of the student loan system has actually enabled colleges to raise their tuition higher than they otherwise would, because the money is coming from a third payer, which is Congress. And so income share agreements, the idea is, you have like sort of all parties, including the school, ideally, with some of their own money at risk, and that would make them think twice before giving $80,000 to parents that they know will not be able to repay it.
Derek, are you familiar with income share agreements? Do you have any view on them?
I mean, that's a creative source of finance if you were constrained in terms of finance. So if you were a local or municipality or a state trying to come up with creative ways to help you finance a system, that seems reasonable and a good path to at least consider. But again, it goes back to what we choose in terms of our values at the federal level of where we want to spend our money. And we should also recognize, again, that the economic returns to a college degree differs by race and gender. So if we're couching a program based on one's ability to reap returns versus a college degree, there are other identifying indicators that are related to cursory characteristics that come into that equation.
Let's see, we have time for one more question from Abigail Johnson-Hess of CNBC. She points out that a lot of the loans that we're talking about are already in default and are likely to never be repaid. So how does this reality affect the estimates of cost of the student forgiveness? Megan, do you have any insight into that?
I haven't spent a whole lot of time thinking about.
We're forgiving something that's probably we're not going to collect anyway, right? I mean,
yeah.
I think the bigger question is, and I think it's a great question. I think what's underappreciated, I think people who cover Congress in DC have this sort of understand something that I don't think the broader public really gets, which is a lot of it comes down to the CBA score. And so if you're looking at, if you're making major changes to these programs, whether you forgive debt or not, the CBA score right now says that they're going to make a lot of money off of a lot of cohorts of the student loan program, that people who have taken out student loans. And so if you all of a sudden write that off, it gets down to how accurate are those projections. But the point is that it comes down to the projection. I know that that's kind of confusing, but I don't think Congress has really come to terms with how much bad debt is on their books, and therefore they're still pretending like they're making a lot of money off of this.
Let's pretend and extend, right? So Jillian, do you Do you have any thoughts about that?
Yeah, I was just going to say, I mean, one thing, even though a lot of people have defaulted on that debt because the government has, kind of extraordinary collection powers, they do recover a relatively high percentage of it. So in terms of how that fits into the cost, that's kind of another question, but it's not like, a lot of people who default on their loans, they're sort of dealing with the consequences of that for a very long time. It's not, it's not sort of like they just are able to throw their hands up and walk away.
Yeah, I mean, if I adding on to Jillian's response, I mean, it's kind of like sharecropping. I know I'm being hyperbolic when I use that term, but the reality is that a lot of people, whether they pay that debt back or not, are burdened with that debt forever. Your credit scores is impacted. Your choice in jobs is probably going to be impacted because you're going to be garnered because, as Jillian pointed out, the federal government has strong capacities of collecting that debt. So, the final thing I'll say to put a button on all of this, debt can be useful and good if it's an authentic choice. But with something like student loan, for a lot of people, they don't really have a choice. They're faced with the prospect of being low social mobility or going to college, and they don't have the finances to get there without debt. And then they're burdened with this debt when they graduate.
Yeah. Okay, this is great. Just want to point out that EWA has a wonderful student loan resource page that you can check out. There's data sources, there's FAQ, answers to FAQ, so it's free. Please take advantage of it. Also, you're going to get a very quick survey. Please tell us how we can be better, what you thought of this. And I want to thank all of our speakers and our wonderful moderator, Jillian. I think this was a really helpful conversation, and thanks everybody for joining us. Thank you, everybody.
Thank you.